Hi, this is Ed from Wise Up Financial Education. Thanks very much for coming onto our website and checking out what we've got under this section. Just a reminder that there's about another 18 different topics that you can check out. We are currently updating the content all the time. And there will be more of these video tutorials around as well. So if you are doing this as a class, you will need the tax worksheet as well to go along with it. And I will make sure that there are pauses along the route so you'll be able to stop the presentation so that the class can catch up and with the different bits of work that we've got in there for them. So overall, tax, it's probably the biggest single outlay that anyone makes. A very small percentage probably pays more than £1 million for their house, but we will all pay around £1 million in taxation over the course of our lifetime. So it is a huge amount of money that's going to be coming out. And it's not just income tax, it's all different types of taxes. Whilst we're not going to cover all of them today, we're going to try and cover the most common ones. And the way we're going to start is we're going to start with a few anagrams. So anagrams, just jumbled up letters in words, and then there will be a link to that particular tax. So first of all, we're going to start with this anagram. And if you wanted now to pause, you certainly can do until you come up with the answer. And the answer to the very first one is capital gains tax. Capital gains tax. Now, can you find out what this link is? Well, the link is that is they are the presenters of Homes Under the Hammer. Now, you might think that's a bit of a strange link, but the reason I put that up is capital gains tax is a tax that you have to pay on money that you make. And by making it, it's not just something whereby you've gone out and you've been fortunate and you've made a little bit of money without the intention of making the money. So, for example, if you buy a house to live in, the house goes up in value and then you sell it, you don't have to pay capital gains tax. But if you bought a house with a sole intention of making money from it, then you do have to pay capital gains tax on your earnings, and that can be up to 28% of the value. So our link here is that when we buy a new house, such as we would do under Homes Under the Hammer, and they say you may buy something for £100,000, you spend £20,000 improving it, and you sell it for £200,000, therefore you make a profit of 80. Well, no, you don't. So these guys on Homes Under the Hammer are wrong because they're not taking into account capital gains tax that would have to be paid. Here's the second one, and I'm not going to pause this one because I think it's too easy. Of course, that one is VAT. So VAT, value added tax, currently at 20%. So 20% of the things we buy are VAT-able. Now, here is the link. Now, the answer to that particular link is that is children's clothes. And children's clothes are not VATable, so you do not pay VAT when you're buying children's clothes. Now, the odd one with that is that there is no demarcation when a child's clothes becomes adult clothes. It's all done with sizes, so it's not actually done on the age of the person buying it. Now, there's other things that we don't pay VAT on as well, so you wouldn't pay VAT on your food shop. Yet you would pay VAT when you go into a restaurant to buy food and eat it on the premises. That's why when you go into Starbucks, there are two prices on the price list. One for drinking your coffee on the premises, one for taking it away. And the sole reason that it's more expensive to drink your coffee on the premises is because you then turn it into a restaurant, so there is a VAT payable. There are other things that you don't pay VAT on, things like books. Things like toiletries are not VAT-able. However, anything that you buy that is used, you don't pay VAT on any of that. So anything that you get off of eBay, if you buy a used car, you will not pay VAT on it. So what about the next one? That one is fuel duty. So when we buy a litre of fuel, we not only have to pay VAT on that fuel, we will also have to pay fuel duty. Now it's a flat rate of fuel duty and it's up to about 60 pence per litre is tax over and above VAT. So it's a huge amount of money comes through to the country because of the tax on fuel. But now we look at our link. So what's the relevance of that link? Well, hopefully you got the answer that that's an electric car, which means it does not take fuel, it just takes electricity. And because there is no fuel put into the car, it means there is no fuel duty being collected by the government. That means because we are all going to be driving electric cars over the next 10, 15, 20 years, it means there's going to be a huge hole in the amount of money the government has coming in tax because there will be no fuel duty being collected. Let's go on to the next one. What do you think that one is? Well, the answer to that one is alcohol duty. Now, whether you drink alcohol or not, every time you buy alcohol, even if it's as a gift to give away, you will be paying alcohol duty. And the amount of duty you pay has no bearing at all on the amount of money you pay for something. So a cheap bottle of wine has exactly the same alcohol duty to pay as an expensive bottle of wine. And on the subject of expensive or cheap wines, a litre of wine means that you will be paying just over £2 in alcohol duty. Spirits is even more. So on a bottle of spirits, you will be paying up to £11.50 per litre in alcohol duty. And on a pint of beer, it will be just under 60 pence. So here is the link. Well, of course, that's a duty-free store. So that would be quite good to actually look at what duty-free really means. Well, whilst you are getting some duty that's free, you are not getting all of the duty that's free. So yes, you won't pay VAT, but you will be paying alcohol duty on your drink. You will not be paying something called import duty. So even though it's duty free, don't get sucked into the idea that you are paying no tax at all, because you will still be paying some tax, and your alcohol duty is one of those. That's why that you could still go to some UK supermarkets and still find stuff cheaper in those supermarkets than you can do in duty free. It's because there's still some tax involved. What about the next one? Well, that one is council tax. So there's only one group of people that don't have to pay council tax, and that's students. But everybody else has to pay council tax, and it doesn't matter if you're employed or unemployed, if you're in an expensive house or cheap house, if you're renting or if you're buying, you still have to pay council tax. And the amount of tax you buy depends on where in the country your house or flat is and how big it is. The amount of council tax that you pay will vary from anywhere from maybe £80 and £90 a month up to maybe £400 a month. And the exact amount will depend on one thing, and that's the amount of public services that are in your area. So there is our link. Well, that's a public library, and the reason that's there is that is one of the things that are paid for from council tax. We could add to that street lighting, refuse collection, public parks, public gyms, public swimming pools, anything that is available in your local borough that is a public service will be paid for out of council tax. And the last one, that one is income tax. Now, income tax is the one where we really do need to get a handle on exactly what's going on, because this is going to be the one that's going to affect you more than any of the others throughout your career. Now, there's an interesting link. Why on earth have I put a hamburger on my link for income tax? Well, rather than trying to explain that now, I'm going to give you the answer to that as we go through this section, because we're going to spend a little bit more time on these than the others. So first of all, How old do you think you have to be to pay income tax? 16? 18? 21? Well, no, actually, none of those are the right answers. The actual answer is that there is no minimum age to pay income tax. You pay income tax as soon as you start earning enough money. So the next question is then, how much are you allowed to earn every year without paying income tax? Well, that figure is called your personal allowance, and everybody gets, that's everybody that earns less than £100,000 a year gets a personal allowance, and you do not pay tax on that personal allowance. You can find out how much your personal allowance is through something called your tax code, and you will find that tax code on your wage slip. Now, many of you will be doing a part-time job, and most of us don't particularly look very closely at our wage slips, but I would urge you to do so, because on your wage slip you will see, as we can see there on the slide in front of us, a 4-digit number with a letter at the end of it. Now, the letter isn't very important, it's really there for your employers. So let's get rid of that letter and replace it with another 0. So on our example, we then get a 5-digit number, 11500. And that then becomes our personal allowance. So for that particular example, the personal allowance would be £11,500. Now, as you can see, that dates back to 2017-18. But if we bring it right up to date, our current personal allowance is £12,570. So you should all have a tax code on your wage slip of 1257 with a letter at the end of it. If you don't have that, you should query that with your employer, because it does mean that you could be paying tax when you don't have to. If you don't have a number but you have a letter called B, or 2 letters, BR, it means you'll be paying basic rate tax of 20% on everything you earn. It's a bit like an emergency tax. So query that as soon as you do if you are paying basic rate tax, because you can get all of that money back if you shouldn't be paying it. So how much overall do you pay? Now, this is where my little link to the hamburger starts to come in. Now, the amount you pay depends on how much money you have. Up to your personal allowance, you pay nothing whatsoever. So anything you earn below that £12,570 is tax-free. On the next portion, so if you like, we've just covered the bottom bun of the burger. On the next portion, on the meat patty in it as in your burger, that's we're going to be paying the basic rate of tax, which is 20%. And that portion is £37,700 over your personal allowance wide. Once we get above that and we go into the lettuce and the cheese and the onion and the tomato, we start to pay the higher rate of tax. And that is 40% of anything going into that band. And that goes from £37,700 over your personal allowance all the way up to £150,000. And then on the very top bun, you'll be paying the top rate of tax, which is 45% on anything over £150,000. And whilst I've not got a burger, I have put all of this into a nice, easy, hopefully easy to understand chart. So imagine there we've got the different layers. On the very bottom layer is our personal allowance. That is £12,570 wide. The layer above that is our lower rate tax band, which is £37,700 wide. The layer above that is the higher rate tax band. Anything falling into that is 40%. That goes all the way up to £150,000. And above that is the top rate of tax, and that's at 45% of anything falling into there. So anything that falls into the dark blue line here, which comes into the personal allowance, you will have no tax to pay. So those of you that are doing a part-time job currently, you're earning less than £12,570, you do not have to pay tax at all. You only begin to pay tax on the portion of money you earn above that. So anything going into the light blue line, you have to pay 20% of that away. Once you start earning more than that, then you go into the higher rate tax band. So you would pay 40% of anything going into the red line away, still 20% of anything going into the light blue, and nothing in the very bottom bracket. Once you earn over £150,000, you will have lost your personal allowance. So you will be paying the basic rate of tax on the very bottom portion, which is in the light blue line. You'll be paying 40% of anything in the orange line or red line, and you'll be paying 45% of anything in the top rate, 45% bracket. So that's why our burger was our link, because the tax rates act a little bit like the layers in a hamburger. Right, before we go any further, I'd just like to bring to your attention the fact that you've got some rights on your earnings. That's called a minimum wage. Now, those of you guys that are already doing some part-time work that are of the age 16 to 17, you've currently got a minimum wage of £4.81 an hour. Legally, you cannot be paid less than that. On your 18th birthday, though, that amount goes up to £6.83. Goes up again on your 21st birthday to £9.18, and at 23 you get the national minimum wage, which is £9.50. Now those amounts do change from time to time. Those are the rates from April this year, so keep your eyes open because they may well change from April 2023. You can of course be paid more than those amounts, but you are not allowed to be paid less. Okay, so now we're going to get onto our activity. So you will need your tax worksheet for this. You can see I've given you two examples there. One, a very small amount of income, one, a much larger amount of income. We are going to do just the first example to start with. So all I want you to do is to work out from the example you've got there exactly how much money you will be expecting to take home at the end of the year. So for the first example, you take a job as an apprentice and it pays you just £4.30 an hour in the first year. Your total earnings for the year are £15,000 and your tax code is 1257L. Remember, that's the clue into our personal allowance. Get rid of the L, replace it with a 0. It means our personal allowance is £12,570. You should have all of the information you need on the worksheet. So I'm going to now pause the film, or you should pause the film, I should say, for a couple of minutes just while everybody tries that one calculation. Okay, welcome back. So let's go through this together. So as we recall, we have a gross income, so before tax, gross income of £15,000. Our tax code is 1257L, so our personal allowance is £12,570, and we pay nothing at all on that first £12,570. That means we have £2,430 that go into the basic rate tax band, and we will have to pay 20% of that portion away. So 20% of 2,430 is £486. So that will be the total tax bill for the year. So we would get to keep £14,514 as our net pay. So our take-home pay is our net pay. For those people that like to look at this thing visually, and there are lots of people like that, I've done a little graph to try and explain this again. So here we go. In the light blue portion is our personal allowance. That's £12,570. We pay no tax on that, so we get to keep that all as net pay. Then on the portion above that, which goes into the lower rate tax band, we have to pay 20% of that away, which is 486. We get to keep the rest. So we started with gross pay of 15,000. We pay away 486 of tax, and we get to keep 14,514. Okay, that's a nice simple example to start. Let's go on to the second example. This one's a little bit more complicated because it takes us into 3 different tax bands. The job pays £62,000 a year gross. Our tax code once again is 1257L, so we should know now what our personal allowance is. So again, I want you to pause the film at this point, Try and do that calculation. You should have all of the information you need on your worksheet, and when you've all got some sort of an answer, turn the film back on and we'll go through it together. So welcome back. I hope you all found that doable. Perhaps not very easy. You would have needed a calculator, I've no doubt. So let's go through this together. We had a job that pays £62,000 gross. Our tax code is 1257L. Get rid of the L, replace it with a 0. It means that our personal allowance is £12,570 and we pay no tax at all on that portion. The next portion is £37,700 wide. That's the width of the lower rate tax bracket. We have to pay 20% of that away. And 20% of 37,700 is 7,540. So we've now taken into account our earnings of just over £50,000. That means we've got another £11,730 that goes into the 40%, the higher rate tax bracket, where we have to pay 40% of that portion away. And 40% of 11,730 is £4,692, I beg your pardon. So our total tax bill for that year would be 7,540 plus 4,692, or £12,232. So we would get to keep as net pay just under 50,000. To be exact, it's £49,768. So again, let's look at that graphically. Going in light blue is our personal allowance. We pay no tax at all on that. We get to keep it all as net pay. The next portion in the lower tax bracket, that is 20%. That is only £37,700 wide. Even though we're earning more than that, we only get the benefit of 20% tax on that portion. So we pay 20% of that away. We get to keep the rest, which means we have a bit going into the higher rate. That's 11,730. We have to pay 40% of that away. So we get to keep the balance of 7,038 of that portion. So we started with gross pay of 62,000. We paid away 12,232 in tax, and we get to keep 49,768 as our net pay. So the next question is, how do we get to pay that tax? What do we have to do to make sure we're within the law and we've paid all the tax that we need to? Well, if we're working for an employer, we don't have to worry about it at all, because our employer will do the exact calculation we've just done. They will take whatever our expected tax bill is, they will divide it through by 12, and they will get to keep the balance. They will pay that away for us on our behalf. We will get to keep the balance under a scheme called PAYE, which stands for Pay As You Earn. If we look at our particular example, which had just over £12,000 through the course of the year as our tax, it means that our employer would deduct just over £1,000 each month, and they would pay us the difference. The reason that they do this is so that we get a nice even amount of money every month. It makes life much easier when it comes to budgeting than it would do if we paid no tax at the beginning of the year, then perhaps 20% tax in the middle and 40% tax right at the end. Make life very, very difficult. If you are not working for an employer, then you have to make sure that this is paid yourself. So if you're self-employed, you have to make sure that you pay your own tax bill. You will not have to do that on a monthly basis, but you will have to do it as one lump sum. So the whole year's tax in the next tax year. So you get 1 year's grace, but you do have to make sure that you pay that on time. Now, if you wanted to pay less tax, there are two ways you can do it. One is legal, one is illegal. So tax avoidance is legal. Tax evasion is illegal. Now, there are some schemes out there for people that earn a lot of money that pay a lot of tax, which are legal tax avoidance schemes. The trouble is that all of these tax avoidance schemes are being challenged all the time by the government. And what starts out sometimes as a tax avoidance scheme can turn very quickly into a tax evasion scheme. That's something that happened to Jimmy Carr. You'll remember the comedian Jimmy Carr that had to pay a large tax bill. His accountants put him into a tax avoidance scheme, which was perfectly legal when he went into it. But by the time 2 or 3 years had passed, the courts had decided it was not a legal scheme anymore. It made it into a tax evasion scheme, which means Jimmy Carr had to pay all of that backdated tax up to the government, which he did. The other way that there is a tax evasion, an illegal tax evasion, is if you are being paid cash and you are paid your tips in cash. So let's say you're working in a restaurant and somebody gives you a tip for a good service you've given them. You do have to pay tax on that, provided your earnings are more than your personal allowance. Don't think just because somebody gives you a cash tip that it is not taxable. It is still taxable. Okay, so all of the taxes I've given you so far can be divided into two parts. Some are direct, some are indirect taxes. And the easy way to distinguish between these two: direct taxes, you do not have a choice. You have to pay direct taxes whatever situation you're in. Indirect taxes, you do have a little bit of a choice. Let me give you an example. Income tax, which raises just over £185 billion every year for the government, that is a direct tax, because if you earn money, you have to pay income tax. VAT raises just shy of £150 billion every year. That's an indirect tax, because if you don't want to pay as much VAT, then buy cheaper goods or buy used goods. Then you are exempt from paying VAT on it. Capital gains tax is a direct tax. Fuel duty is an indirect tax. You don't want to pay fuel duty, get a bike. Don't pay fuel. Stamp duty, that's money that you have to pay to the government when you buy a house. As soon as you buy that house, you have to pay stamp duty on it. That is a direct tax. Alcohol duty is an indirect tax. Inheritance tax paid by your estate after you pass away. That's a direct tax, no avoiding that one. Road fund licence that you have to pay if you own a car every year. That is an indirect tax, because if you do not own a car, you don't have to pay it. Council tax is a direct tax. And corporation tax, which is money paid by companies on their profits, that is also a direct tax. All of those taxes bring together around £800 million a year. The next question up for discussion, and I'm going to pause the slide at this point, is where does all of that money go? Well, welcome back. Hopefully you had a good discussion on that. Lots of different ideas. I'm going to run through just some of the major ones. Education is paid for out of our tax. The NHS and health services, all of our policing, our court system, our jails, all of those sort of things are paid for out of our taxation, as is the fire service. Also roads, bridges, rails, all paid for out of our taxation. Benefits, so allowing people to have money from the government when they are not earning themselves so that they can continue to live, that is paid for out of our taxation. And so is social services, looking after our elderly people, looking after our young people as well. We still borrow more than we save, so we have to pay interest on that, and that is also paid for out of our tax, and that's coming out to about £40 billion every year. Lots of little bits and pieces for the royal family, royal parks, things like that is all paid for. I'll just put all that together under miscellaneous. Then the last big one is our defence, country defence, so our Army, Navy and Air Force. Now, as we went through those taxes a little bit earlier, we found that fuel duty and road fund licence added up to about £38 billion every year. We've also decided that over the next 10 years, more and more people are going to be driving electric cars, which means the amount of money that the government is going to get in through those particular taxes is going to go down. As you know from budgeting, if we're not earning as much, we can't spend as much. So we either have to replace that tax that we're going to be losing with more tax from other areas, or we just have to spend less. And that's going to be a really interesting discussion that you can have after this session to decide who agrees that we should be taxing more to pay for the services, who thinks that we should be taking some of the services away so that we don't have to spend as much money. One thing's for certain though, at the moment we are spending everything we get plus a bit more as well, and our total outgoings currently come to slightly more than £800 billion a year. And it can change. The areas that we're spending our money in can change. A couple of years ago we would have been spending a huge amount on the NHS because of COVID, and things like roads and rail plans were all changed because we needed the extra money to pay for the NHS. That had to be paid for from something, so we didn't do as much in the way of infrastructure changes. Now things have changed again, less money going into the NHS and more going into the armed services because of the situation we find ourselves in the world, where tensions are obviously running very high and our defence takes on a much greater degree of importance than it would have done a couple of years ago. So all in all, these things have to be budgeted out, they have to be balanced, and things will change all the way through. Really good discussion to find out what your views are. But remember, overall, we cannot spend more than we've got coming in, or that overall interest will continue to increase. Thank you very much indeed for watching. Hopefully you found all of that useful. Use the QR code that is on the screen there at the moment if you want to access other parts of the internet and the website. If you're happy with where you are, just again, thanks very much for watching, and remember that £1 million is going to be very hard earned to make sure that you pay that back in tax. Bye for now.